Opening a bank account for your DIFC Foundation is not always simple. Even if the foundation is set up correctly, without the right documents and beneficiaries, the whole structure can fall apart if bank rejects or delays your application. Well, the problem here is that many offshore banks don't fully understand how DIFC foundations work. Some ask for documents that don't even exist under the DIFC rules. Others see you as high risk and slow everything down. So, in this video, we'll walk you through how to avoid these issues, what documents you actually need, and which banks are more likely to say yes to your Dubai foundation, and how to speed up the process without compromising on quality or compliance. Before we start, my name is Shiraz Baid and I'm the founder at LepidusWealth, where we help clients and families protect their assets using a range of tools including trust, foundations, wills, and offshore structures. So, if you own a business or real estate, don't wait until a legal or health crisis to start thinking about protecting what you have built. Instead, request your free and customized asset protection plan by clicking the link below. You can then implement it step by step as your journey progresses. Let's start with what makes a DIFC foundation different from typical offshore entities. Unlike offshore trusts, a DIFC foundation is a registered legal entity with its own legal personality. It's regulated, auditable, and seen as highly credible in most banking jurisdictions. But the credibility only carries weight if bankers understand what it is. This is where your banking strategy has to be aligned with your structure. You will want to start by shortlisting banks that already work with foundations or trusts. This includes private banks in Switzerland, Liechtenstein, Singapore, and selective Caribbean jurisdictions. But even within these geographies, not every bank is suitable. You are looking for two things. First is prior exposure to DIFC or ADGM structure. And second, a client onboarding process that doesn't treat you like a sanctions risk. In practice, this means looking at banks that have regional representatives or at least a relationship manager who has worked with Middle East clients before. These bankers typically know how to explain the structure to their compliance team and fast track the documentation review. This subtle difference between a smooth onboarding and a 4 month delay often comes down to the knowledge and preparedness of the banker handling your file. Documentation is another critical issue. Many offshore banks will ask for trust deeds or registered agents, neither of which applies to DIFC foundations. Instead, you will provide the foundation's charter, the registrar's certificate, and if applicable, a guardian appointment letter. The more prepared that you are with these documents, for example, translated, notarized, and summarized in a clean bank ready pack, the smoother your experience will be. It also helps to include a clear explanation of your foundation's purpose. A brief statement outlining whether the foundation is for succession, wealth preservation, philanthropy, or holding commercial assets can go a long way in preempting compliance questions. Including a simple structure chart and one pager of your background helps paint a complete picture. Another point many overlook is the profile of the foundation itself. Is the foundation a purely holding entity? Does it have commercial activity? Or will the bank accounts be used for passive income only, or it will also manage disbursements of beneficiaries? All of these influence your choice of jurisdiction. For example, if you expect regular distribution, Swiss banks may flag that unless the use of fund is clearly documented. In contrast, banks in Mauritius or Georgia might be more flexible but offer lower reputational value. The fees also vary widely. A Swiss private bank may charge $5,000 to $10,000 just to open the account, plus annual maintenance fee, and Caribbean options may offer lower cost setup but typically require higher compliance scrutiny. In either case, you're not just paying for a place to park money, you are paying for execution speed, relationship access, and long term reliability. Now, language, documentation standards, and cultural familiarity also matters. A bank used to serving Latin American clients might struggle with Arabic naming conventions or POAs issued in Dubai. These are also small issues that cause long delays if not anticipated. This is why we often recommend pre screening the banker, not just the bank, who will actually be handling your file. What is their background? And are they familiar with DIFC public registers or licensing portal? Some clients also benefit from engaging a banker through a private introduction rather than cold application. A trusted referral can mean the difference between being seen as a valued client versus another compliance headache. This is especially true if your foundation involves multi generational wealth or international tax considerations. Now, let's consider banking timelines. Many high net worth individuals assume that once the foundation is registered, banking will take 1 to 2 weeks. But that's rarely the case. Offshore onboarding can take anywhere from 3 weeks to 3 months, depending on the bank's internal process and your documentation quality. Having a clear file with KYC summaries, UBO declarations, and structure charts pre prepared can save you weeks. You will also want to check the bank's stance on common reporting standards. Will your foundation be reported under CRS? What if the founder is based in a non participating jurisdiction? These questions matter for long term tax planning. Some banks may require you to list beneficiaries, even they have no current rights. Others may treat the guardian as controlling person. These variations must be mapped before you commit. You also need to consider currency management. Will the account hold only USD or do you need multiple currency functionality? If you have income or disbursements across several regions, the bank's forex capabilities and transfer policies become especially relevant. It's about selecting a partner, not just a service provider. The right bank enhances your structure's usefulness and protects its integrity for years to come. As I mentioned earlier, if you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long term financial security, you should really check out my next video right here.